Hello, I am Wanderer001, and this is my review of Wealthfront, an automated investment solution, or as the term has been coined, Robo advisor. This is a passive means by which you can invest towards either a retirement savings account, regular investment account, which is taxable, or coming soon, a 529 college savings account. Now, there are other reviews of Wealthfront out there, but I decided to make one primarily because, well, they've come up with a new user interface, which you're currently looking at, which is their version 3.0, as well as a lot of the reviews that I saw were people that were investment reviewers. So they put $10,000 into Wealthfront or Betterment or some similar service and do research for 3 months, give you a spew of here's what they saw, and then pull their money out of the system. Now, one, I don't have $10,000 that I'm just going to drop into Wealthfront or a service like this. And two, 3 months to me seems rather short. So I'm approaching this from two different angles. One, I really did invest with Wealthfront with my own money for my own IRA. In this case, I opened up a Roth IRA. And I do have other investment accounts, other savings accounts or Roth IRAs, which you can see down here. But I decided to open up a automated account because, well, there were problems with this one here. This is my wife's account down here, but this guy here, they gave me some problems and I was looking for a change. Now, I do have a small amount of money that I invest, which is one of the big differences. I'm not dropping $10,000 or $50,000 into this account to test. I dropped about $2,500 to start the account off, and that's my real money. The other thing that I did differently is I did this for 6 months currently. Again, this is my real account, and I will be continuing to use Wealthfront, but I did this over the time span of 6 months currently. The major difference that I see based on other reviews to this one is this page here. This is the Wealthfront version 3.0 dashboard. This will allow you to see a lot of account information in one place. Now, the big thing with version 3.0 was the inclusion of accounts that you have outside of Wealthfront. So at the top here, this chart shows across all my investment accounts, currently just my IRAs, how much money I have invested. Currently, I have a value of $23,212 and a projection of estimated value in 70, or by the time I'm 70, of 65,397. And then you have this line here, which shows you the progression as time goes on. Now, you can do a breakdown for each individual account. If I come over to my Wealthfront account, I can just strip that out and do a projection just for my Wealthfront. But I can do each and every account that is attached through Wealthfront. Underneath that, you will see your accounts. It is listing all of my accounts. You can add a new account by tracking a new account. These are currently all the accounts that you can track. They are adding more, and if you want to, you can request a financial institution. I have, because there's a couple other accounts that I have that I'd like to integrate. You will notice over here by the Merrill Lynch account that there is a number 2. That's because I have 2 accounts at Merrill Lynch. I have a Roth IRA as well as a individual investment account. The individual investment account I have turned off for the purposes of this because I just want to be able to see my IRA information, not all of my investment accounts. And you can turn that on if you want, but that is my personal choice. Now, coming down to the Merrill Lynch account, you can see current value, and you'll notice here there's an asterisk with we found 2 issues. You might ask, what are those 2 issues? If we click and expand that, you will notice it's saying over the course of 30 years, I can have an estimate of $33,000 that I am paying over. Now, how does it come up with that? You'll notice the 2 options right here, high fees. Currently, it is showing that for this particular account, my Roth IRA, it is breaking down where all these fees are coming from. So here we have a $50 advisory fee, which I was aware of that my account had. Now, for the particular assets in this Roth IRA, I was not aware that there was a $435 product fee, giving me a total of $485. So you'll notice currently, this is what I'm averaging. And if I changed it to Wealthfront, this is what they're saying I can get. So this was kind of eye-opening. I was aware of the advisory fee, but not the extra fees associated with this, the Income Funds of America share. annual cost basis apparently of 3.84%. Now, I also have this one down here, which is, if we expand, it's saying that I need to diversify more, because really in this IRA, I only have 3 products. I have 2 of the AmeriFunds and then a single stock option. If you want to pay attention to its recommendation, it says you should diversify more, and you can do so by using Wealthfront. And if you hit this Help Me Fix This button, it will bring you through the process of importing your account from Merrill Lynch, in this case, to Wealthfront. Now, my wife's Vanguard account here, you'll notice that it says cash drag. This is one option. Now, she does not have a lot in her account currently, so this will only cost us $1,500 over the course of 30 years, but that's still a lot of money. Now, expanding this, it's explaining where the cash drag is coming from. And this is because we have $200 left in her settlement account, because she's new to using Vanguard and we're not sure where her expenses are going to come from, whether they'll take it from the mutual fund that she purchased into, or if they'll take it from our settlement fund, which is why we're leaving the $200 in there for now. Again, she also has drag, so it's saying if she diversifies, she'll be able to get a little better output. Coming back to the main dashboard page, you'll notice add funds and open a new account. These are pretty much on every page, so I'll discuss them a little later. You can lower your fees by sharing Wealthfront. Again, this is on another page. I'll show you that a little later. Down here, you have your Wealthfront Digest, which can be changed for a set date range or all time. Currently, like I said, I'm only doing this 6 months in right now. So it's showing me all my activity for 6 months. I have 16 free trades made. I have 0 tax loss harvesting because I have a retirement account as opposed to an investment account. And I have received $18.55 in dividends. And that's all because of this guy here, the Wealthfront account. Now, you'll notice, unlike the others, Wealthfront has a little drop down next to it. If I click on it, it will expand and show you more information about the Wealthfront account. My total contributions into Wealthfront right now have been $2,920. And I have a time-weighted and money-weighted return. Now, these are 2 different returns, but you will notice that they are in the high 9%, almost 10%. What I'm going to do now is bring you into Wealthfront. So this is what you used to see with the old versions of Wealthfront. It brings you right into the Wealthfront account. You didn't see those other accounts. So just starting at the top, this is a label that you can change whether you want to or not. You can change this to something else if you want to. You can open a new account, and there's those buttons again, add funds or more. I'll explain that a little later. And then over here, this advisement fee moved from over in the top right to the lower left, or the left-hand side here. So I'm just going to scroll down a little bit and show you this is what your Wealthfront account looks like. It will show you the total account value, and here are those percentages again, your money-weighted versus time-weighted. Now, they suggest that your time-weighted is better than your money-weighted as a better approach to your overall performance, as the money-weighted is based on how the market's doing, when you're pulling money out, when you're adding money in. This one is just purely based on time. Now, the chart has changed a little bit since its inception. The big thing is this blue line here. This blue line indicates the actual amount that you have added to the account, while the green line represents the actual fluctuation in the market. And you can see up here in January, when I first started the account, the market was doing really, really poorly. Here you can see I added more into the account, and luckily for me, the market started picking up around March, and the money that I added got to grow. Now, you cannot really use this to time the market, because here you can see there was a dip in the market, but it wasn't the absolute bottom when I added more to the account. As you can see, it does fluctuate as any market does. And I should probably preface saying my results are my results. Your results may vary based on when you put money in, what your risk tolerance is, as well as what particular style, if you're doing an IRA versus an investment account. I will say that it did take 5 days for the account to actually get created, from my signing up at wealthfront.com to being able to put money in. So it took 5 days for me to sign up and then for them to initially invest, which is why the first day is January 13th, even though I started the account early January. Coming down here, we can see the commission-free trades and days since last deposit. Now, I have been operating on a every other month basis, so I really do need to kind of put stuff in. Here you can see the breakdown. You get a nice little pie chart, as well as, hovering over just about anything will tell you what that item is. Here you can see my US stocks are diversified in Schwab. Now, if I come over and click more information, what that's going to do is open up the Schwab page showing me here's all the information you need to know about this particular ETF asset. And you can do that for just about any one of these. Now, there is a little cash in the account, and that's to cover fees. Even though I'm currently operating fee-free, they do kind of still keep that in there just in case. Coming over to the Plan tab, just going to scroll down a little bit. Here you can see my risk tolerance. Now, I'm currently set for 6.5. You can change your risk tolerance once every 30 days, but it is going to try and caution you against doing so based on market fluctuation. Oh, you really should be doing this for life changes. You get married, you have a kid, you're actually going to retire. Now, I won't lie, at the beginning, when I first opened the account in January, I wanted to back it down a little bit because I wanted to strengthen my bonds. But I'm happy I didn't, because it kept me on the progress that you're currently seeing with the 9.6 in returns. Now, if you ever did want to change it and see how it would change your overall percentages, you can just go back to the Wealthfront website and start like you were going to create a new account without being in your actual account. And that will let you play with the numbers, and you can watch how the percentages move. So for me to change from 6.5 to 7, which I had considered doing, it wasn't enough of a change for me. So I just justified leaving it at 6.5. Now, one of the big things that I'm curious about, again, Wealthfront says the optimal account minimum should be about $5,000, even though you can open an account with as little as $500. The estimated investment portfolio that they're describing is very Vanguard heavy. However, if you remember, my first one was Schwab here. So it's telling me all the best practices and why it should be Vanguard, but I have Schwab. And I think part of that might be due to the fact that I only put $2,500 to start. So really what it's doing is and I've gone through each of these, the lowest tier here is generally the lowest buy-in. The Vanguard is a little more expensive to buy than Schwab. So based on the amount of money I had, it put me into some of those different investments. And over time, as I get closer to $5,000, I'm hoping that that will change. Actual performance versus projected performance. Right here, you can see where I started at 0 and then dive down to a -3. That's about as low as I've gotten, and that was in early January. I average about right here, 5.5, and it peaks around 9.5. I haven't gotten into the double digits yet, but I'm hoping that will change. So realistically, what happens is even if the market's down, because it's diversified, your portfolio shouldn't take that much of a hit. Coming back to the summary page briefly, I'm just going to show you returns here are in green. If you ever dip to a negative, these will never be red. They've changed that. You will still see a negative sign, but it will be black instead, because they don't want to scare you off. And that was something I read in their white papers, optimal retention and what have you. Over here, you can see the target versus the current and any difference, positive or negative. And again, the larger your account value is, the more that they can play with these numbers. I currently don't have enough in there for them to do too much with. I'm going to now go to the transactions tab and show you what this looks like. This pretty much just shows you exactly what you've been doing with Wealthfront. Down here at the bottom, you can see my initial deposit of $2,600, and they invested $2,588. Now, notice that there is a magnifying glass next to this, and what happens if I click on that, anytime you see that, it will break it down and show you more information. So here you can see all the items that it purchased for me. If I do this with a magnifying glass next to an advisory fee, it will show you just how minimal the advisory fees could be if they weren't waived. So for my $2,500, it would have only been 33 cents for that month. Now, I'm going to come up to this add funds, because really all this is just, you can see the dividends that I received, and that will change based on what your portfolio looks like versus mine. So I'm going to say, I want to add funds to my account. And you can do so in 3 different ways: bank transfer, wire transfer, or account transfer. So that's the last one, is to bring in like a Merrill Lynch into this account. Now, you will notice that it is set for repeating right now. If I change it to one time, and I'm going to start with one time, just to show you something. This chart over here is very, very helpful. So let's say you're going to deposit one time $100. You can see once you're doing $100. Your current projection for 70 for me would have been $18,512 just for the Wealthfront account. Doing a deposit once of $100 will make that $19,093 over the time period of 38 years. Here it says up to $580 extra over 38 years. Now, if I change this to a repeating deposit, you'll see that number vastly changes from 18,000 up to 143,000. Now, giving me 124,000 extra over 38 years. This chart is very good because just adding $50, you can see how much this is going to change. And you can set it up repeating for monthly, weekly, 1st and 15th, or quarterly, and pull it from a particular bank account. So this chart, very helpful. And ideally, you should set up a repeating deposit because, well, with the way that Wealthfront is designed, it's designed to be a passive income stream. So you should have money going in at different times. So you're not just lump summing large amounts in there when the market could be doing good or the market could be doing bad. The other option right here is more. So from more, you can withdraw funds, edit a repeating deposit, manage bank accounts, or transfer account into Wealthfront. Now, withdrawing money, and because I have an IRA, they're warning me against this, you can withdraw $250 minimum and up to as much money as you have in the account, so long as your account does not drop below $500. They require you to have a minimum of $500 to keep the account open. But you can withdraw a minimum of $250 as many times as you want. It just takes time for it to process. Now, there are some extra options across the top here, which I've been keeping out of sight only because there's some sensitive information up there. But you've got FAQs, contact us and log out if you click on your name in the upper right-hand corner. Settings is something that I want to show you because there's an important area in restrictions. Security, it's going to ask you a lot of personal data stuff, so I'm not going to show that. These two are something that you answer when you first set up your account. But this, stock restrictions, if you own stocks, which I do, I own GE, Disney, and one other one that they don't seem to be able to bring in, and I wonder if that's because it's not an ETF. But it is important that you put stock restrictions in place, especially if you're doing a taxable investment account, because what will happen is if they do a wash sale, and I'm not going to try and explain what that is, but you want to make sure that they do not try and sell stocks that you own elsewhere. Other things over here are notifications, investment portfolio, and your account. But I wanted to show you that because this is something that nobody else talked about, and I want you to be aware that that's an option that you need to be paying attention. Another option at the top of the page are your tax documents. Here you can see they're in PDF form, and it does connect with Intuit TurboTax. So come tax season, if you use TurboTax, you can integrate your Wealthfront accounts into TurboTax. Now, I just want to touch on two other things. One, the deposits. I did forget to mention that deposits take about 2.5 to 3 days from you sending money to Wealthfront actually processing the money. So just be aware, you're not going to really be able to time the market with that. And the last, which I keep skipping, is this over here, the assets managed for free. You can see I have 15,000. That's because I used a referral link that I found to have an extra $5,000 managed for free. If you sign up through Wealthfront, their main page, you'll get $10,000 worth of assets managed for free. However, if you use somebody's referral code, and I will place my referral code in the description area below, you get an extra $5,000 managed for free, and I will get an extra $5,000 managed for free. And that's it. The transaction ends. The beauty of it is you, if you choose to open an account, can get your own referral fee. So if you refer people, you can get an extra $5,000 managed for free, and they can get an extra $5,000 managed for free. I get nothing after your initial, using of my referral link. So you can know like 36,000 people, and I might just be able to get 2 or 3 people to sign up. So your 36,000, I will never see any part of. If you found this helpful, I would appreciate it if you use my referral link, but you don't have to. But I will highly suggest that you use somebody's referral link. Do not just go to Wealthfront and sign up through their account. Yes, $10,000 managed for free is awesome, but $15,000 is better. So if you don't use mine, just do a Google search. It's how I did it. I found a write-up somewhere, and I used their referral key. But if you found this helpful in any way, shape, or form, I would greatly appreciate it if you used mine. Now, I will do a follow-up in another 6 months if anybody's interested in that. Again, this was a perspective of a lower investment account. This was a Roth IRA. Maybe in that time, I might open up a taxable account. I haven't decided yet. But really, for what it is, which is a passive way of investing, which is my preferred method of investing, it might not be yours, but this is what this is geared for, passive, diversified portfolio. I'm happy with it so far, and I've been watching it like a hawk for the last 6 months. I've been in several times a day, taking meticulous notes, and so far I'm happy with the results. So, I have been Wanderer 001. If you have any questions or comments, please leave them in the area below, and I will try my best to answer them. And as always, thanks for watching.